Well, I think if you look under the hood, it's a little different than what it looks like on the outside. I mean, we've had 3 months now in revisions, and they're always negative. They're not revised upwards. So I think what happens is people get sort of a little confused on that. And this number this month, you have to remember, just in a big sense of things, it was 8% lower than it was last July. So even though it's okay, I think it's just barely okay. I'll put it that way.
Talk to us about the different sectors, right? And truly, even though the markets focus on the headline number, I think there is growing concern that a lot of jobs are part-time, wages aren't rising fast enough, automation is changing the way that the workforce operates. Beyond just some of the numbers, the downward revisions and declines from the same time a year ago, what is the sector data telling you that is causing concern?
Well, Kristen, if you look at the challenger number of layoffs on that are affected by tariffs only, it's just shot up off the map practically. It's a big number effective of tariffs. You see that. And then if you look at Ford this past week, a number of people, if you look at the auto supply chains, they're really breaking it down now. And so I think what that will do eventually, though, particularly with this particular tariff that's coming in, I think you'll get into the retailers now. And that will have a big impact.
What about wage growth? I mean, 0.3%, is that something we should expect to be higher, or maybe only a little higher?
I hope it's not bad. It's just that what happens with wage growth, you also have to look at hours worked, and they may tend to offset each other sometimes as far as costs for employers. And what's happening now is the hours worked are actually declining a little bit, wage growth up. We always feel like this wage growth is going to run into margin press with the public companies, and that's coming in the next 3 to 6 months.
Yeah, average weekly hours worked edging lower to 34.3. I think that provides some cause for concern, even though we do see that it is not necessarily just solely part-time work. What do you make of that number?
It offsets, Kristen, the other side, which is the increase in numbers. And when you're trying to look at the whole package, and that's been going on now for a few months. I think we've had like 3 months of that decline, and you never like to see that. You think if business is really strong, hey, we're going to keep you here a few more hours, than what you're doing now, and that's what people are looking at right now.
I want to look way into the future, if we can, just for a second. The economy needs to add at least 100,000 jobs every month to keep pace with the growing population. Is there anything that you can see in the near midterm that might look at that number and say it's in danger, that we're not going to be able to hit that?
Well, we look for, probably unlike most people, we think there's going to be more of a slowing economy. We think people are not ready for that in here, and we're looking at, of course, the next 12 months now. And I think if that happens, I don't know that you go under 100, but I certainly think it breaks below where it is now. And that's something we're thinking about. And the other side of it is the problem with the economy is a lot of these jobs are just not high-level jobs, I think when they did the tax bill, they should have gone a different direction to try to get people to hire at a higher level.
Look, tariffs sending the markets down, worse at one point, down 300 points on the Dow Jones Industrial Average, the S&P 500 down worse than 1%, and we are looking at our worst week for the major indices this year, this week. Tariffs, interest rates that might not be cut for the remainder of the year, even though the market wants them to be. How does that impact job gains or lack thereof between now and the end of the year?
Well, I think what's happening now is that the Fed's caught in between something they can't control. I think they're a bit confused, honestly. We've always felt all along that they should go further than where they've been. And the second thing on the tariff side, I think this particular set of tariffs, even though it sounds not as bad at 10%, it really is, because it gets into the consumer. And so when you pair those two things together, I think that's going to make it tough through the end of the year.
How bad of a Christmas are we going to have?
Depends on how much they borrow, Hope. I mean, if you look at the second quarter, people borrowed a lot of money. That's why the consumer went up big in that quarter. The only thing that would change that is usually when you have a negative down market, it will change it. Didn't change it a lot this past December, though, oddly enough.
Right, exactly.
But yeah, it's hard. That's a hard one for me.
Yeah. All right. Well, we're going to have you back, of course, to talk about this going forward, and the big Fed decision, erased this week by all the tariffs that news coming yesterday.
Ted, thank you for joining us.
Thank you,
Here from Austin, Texas, that is Ted Oakley, managing partner and founder of Oxbow Advisors.